Alrighty, let's just get straight into some S&P technical analysis, a little bit of other stuff, and some macroeconomics. So let's just start right off. Let's go into the daily candle. See how this week has begun. We're already off to a crazy start. Okay, so just do a little of this action. So this was today, June 1st. And we have a very long lower wick on the daily candle. So again, this kind of candle at the top of a trend can be a bearish sign. However, I don't know if this is necessarily bearish, especially with the news that we were seeing. Uh, I don't think it's necessarily bearish. I think this is a shaking off more bad news. Again, these lower wicks, just the market keeps on shaking off bad news. Obviously, this was mostly, we opened up here, we dropped off in futures. I'm pretty sure that's what that was. Right, that's going to be the long lower wick right here. So we open up here on futures, we drop down to here, and we kind of wind our way up here today. So this is the level I'm looking for a. Oh, we wind our way up here. That not this part. This is the level right here. Okay, so now the indicators are back. This is the level I really think we need to break. This yellow line I put in today. I don't know if I sent this over in the Discord yet, but this yellow line, to break this high over here, would be a crazy bit of momentum to the upside if we can get a close up there. That's what we really, to really open up the bull case, we really need to close above this level right here. I wouldn't say this is necessarily support or resistance. It's more of just an overall market sentiment aspect rather than support or resistance. Obviously, the supply zone came into play here twice. We came up here, tested it here, came back up, tested it here, and now we're falling. We had this little. I thought it was a bull flag. I thought I'd like to have seen us continue off of this, but obviously we dropped below, and now we're trading in this little range, and we are consolidating here a little bit towards the upside. Now this could just be another flag up before we continue downwards. So watch out for that, obviously. But I am pretty bullish. I have a pretty big bullish bias, especially as we are trading above this key area. We'll bring it back up to the 1 hour time frame as we continue to trade over 2970, which I think this is about a similar line that every single other person that does any form of technical analysis has. But it's important if you don't have this to have this line. This line is critical. Once we are obviously on the high end of the range. Once we take out this level, we could really see some potential downside to the midway point and then ultimately to the bottom of the range. But right now we're still at the top of the range, and this line is still a huge area of support. This is mentally a huge level of support, literally a huge level of support. We have supply zone here. This is a critical level. It looks like a supply zone. I haven't actually tested to make sure that it is a supply zone. Have not looked at the full candlestick pattern, but it looks to be a supply zone. So we still have what looks to be supply zones potentially down here. We have VWAPs around this level too. We have we have some more supply. I mean, demand zones, not supply zones. I take it back. Demand. We have demand zones. Right. This one is demand zones, not pressure. Got retested here, but it could still play a factor. I'd still look out for it. But this demand zone is a major factor. So let's even break it down even more today. Again, these flags formed, and yeah, that's gonna. Let's talk about the upside. So we'll actually bring it up. Good thing I remembered to talk about the upside. So basically, what we're really looking for is a break of this supply zone, and that's really going to expose this low 31. Some people have their supply zones. There is another supply zone that people have. I've seen a lot at the low 3100 level, which is a valid supply zone. I don't have it on this chart, but this supply zone is also valid right here. So I would be looking for something potentially here, the low 3100 area, for us to maybe get a small pullback from that supply zone. Obviously, these are fresh supply, and they will play a factor. Do not think that we will run right through them, because that's bad. Don't think that. So we probably get a small pullback to, I don't know, somewhere in this area. And when we start getting a pullback, y'all are going to realize we're getting a pullback, because this is what pullbacks look like. especially in this hold up, my thing's not locked. Especially in this market, the pullbacks they're steep. We we really this was a textbook play if you played this, but bear flag right here. But the pullbacks they're pretty steep. If you go into like the 4 hour time frame, it's just all red candles, all red, all red, all red, all red, all red, mostly red. Yeah, but we've been all red, all red. So yeah, when we're getting one of those, you'll see it. The waterfall will be there. But until then, and also even the run ups are pretty bullish. A lot of green printing. So yeah, you will notice when we're getting a big move. We got big moves here. Like you'll notice it. Um, Again, I want to talk about the mental aspect. Right now, this is a very difficult trading time to trade. Like you could play these, but you're not getting like the profits you were seeing before potentially on these huge swings downwards. And and don't try to fight the trend, especially on the way up or down. Don't try to. You're gonna get burned. It's happened to me in this time period a little bit, but you live and you learn and you recover. So I'm gonna talk briefly about a play that I made today. Going into the close, right here, we actually picked up a long SPY position. I got a June 19th call at like an okay strike. It wasn't like crazy close. I think it was in like the low 320s on SPY. So it's about 10 points out of the money. But then again, in 2 weeks, we could easily run up 10. We could run up 10 points this week. So it wasn't that expensive. It was less than $100. That's all. That's what I remember. So that's that little play where I'm okay. If that gets burned, that gets burned. Obviously, it would suck to lose that like right off the bat like that. But it is what it is, and I think it's a good play. Especially because the amount of upside potential we have. And I would not, although there is a lot of downside potential and a lot of bearish news, I get that all. I get it. Um, yeah, I think the upside is, again, buying at the top of the trend risky, but you got to manage your capital. I'd like to think I'm managing my capital a little bit. You got to manage it. And yeah, so that's that. Let's go into a little bit of a macro breakdown. So sector performance today. Tech, flat. That's what I mainly trade. Tech was flat. Didn't do anything with tech. I picked up a small long last week and it was pretty flat today. I was down like $1 on it. It was like literally was at the same movement as yesterday or last week. But yeah, there wasn't today's price action was choppy to say the least. You obviously saw Boeing, Tesla completely run. Crazy stuff. But yeah, let's go into this chart. So there's going to be a common theme with all these charts, and that's they're pretty bearish, because there's nothing right now that's too bullish, but hope, and markets look to hope, so don't discount that. So right here we see that the M2 money supply, which is M1 plus checkable deposits, I'm pretty sure, if I remember my econ correctly, it's gone through the roof, and that's obviously because we're printing money through the roof, or not really printing money, but the Fed is digitally giving out money in the form of bond purchases. But the money velocity is decreasing, and money velocity, and to money velocity, which is kind of the same thing as that. The money velocity is just how long it takes for a dollar to circulate the economy. And as you notice, our money velocity has steadily been decreasing, and a trait of a strong economy is when, and it also coincides with low consumer savings, would be a higher money velocity, because more dollars are being spent, and the more dollars get spent, the faster the money moves around the economy. It's basically just a dollar circulating the economy, and it's low, and this is bad, but it's been low. It's been getting lower. We've been on a D trend since 2008. Before, really, I mean, I guess you could say we had a little bit of a bear flag right here, but and this is going to coincide directly with this chart right here, and there's a lot of data on this. I would just like to point out, since this starting January 20, this is now, I'm assuming, obviously stimulus checks have gotten big, other sources of income have gotten big. I don't know what other sources of income people have, like drug dealing. I don't know other sources, but maybe babysitting, stuff like that. Like, no one's doing much, so I'm just curious as to what other is. But this is the big one right here. Savings, everything is down. Taxes, spending, goods, services, down, down, down. GDP's down. That's a given. Savings have gone up. As savings go up, money velocity decreases. Money velocity decreasing is not good for the economy. But then again, it's been decreasing all throughout the greatest bull market of all time. So yeah, this is not. I don't think this is poised at change really. But it's interesting how like it went up here at the bottom. Oh wait, never mind. That makes no sense. But yeah. So let's go right here. So net percentage of hedge fund managers who are overweight on regional equities, and you notice that the U.S. is strongly outpacing everyone else. Uh, Hedge fund managers think that the U.S. equities are a better bet, a better value bet, a safer bet, I guess, which could help explain this. Hold up, I'll be there. I'll be there. I'll be there. This retrace. Now, let me since I've been saying the word flag a lot. Let me just raise the question one more time because you've seen it on about every single person's thing. Bear flag? Question mark? For the nth time, because I bet everyone's saying that. Everyone that you look at for technical analysis. But yeah, let's just breeze right through these final graphs. Obviously, exports and imports are in the gutter, the shitter, everything right now. They're just destroyed, which is again playing into the GDP. This is not good. We're not quite at these '08 lows yet, but we are very quickly on pace to do so. And we're not showing any signs of a turnaround here. There's no sign of a turnaround. So I'm not gonna sit here pretending to know a lot about oil because I really don't. But I know how oil and the stock market have kind of worked together during this rally. When oil went negative, the market did not like that. If you guys remember that. But yeah, so futures on oil are pretty strong. Not quite negative 30, so that's good. GDP growth. China is somehow really all right. Yeah, this is not. I don't think they're growing by 14 trillion, but they're on the growing side. And the majority of the world, including us, are not doing too good. They're growing like looks like close to, or like they're kind of flat, maybe. Or maybe they're negative. And they're just, yeah, they're just not as worse off as we are, it looks like. Oh no, it looks like they're doing like, I don't know, like 2 point something %. So, if you look at GDP growth is not looking too good. Spain, Italy, that's tough. Spain banks are not in good shape right now. And this is just this is just a cool chart I thought I would point out. Zoom in. Global searches for coronavirus inverted, obviously, with the scale, and then the S&P 500. They have some pretty crazy correlation. There's a divergence there, but we quickly snap back up to fill it. And yeah, that's crazy. And yeah, this one, I don't think this one's ever. These are just normal. So yeah, that's a bit of the macro. Again, reviewing some key levels here, and we see we're really looking for a breakup above this CL line. That's pretty strong bullish sentiment, and a breakdown of this area would be pretty bearish sentiment. If we do get down to here, this would be an interesting spot to get long potentially, for a potential. Obviously, we did come down and test this here. I think this happened. This has happened during market. Yeah, it did happen during market hours. Oh no, that was last Tuesday, or no, that was last Wednesday. I remember that. Yeah. So yeah, we did play this a little bit. I remember that. But yeah, we could be looking at a potential similar situation. Don't get me wrong. But yeah, I hope you all liked the video and trade safe.